Hi, this is Neil Clements, and this is The Real Deal with Neil. Today, we're going to be going through how to fundraise private money in a simple way. And we're going to talk about how to do it quickly, how to do it easily, and then we're also going to talk about breaking through some limiting beliefs that will help you fundraise private money faster. So, let's get to it. So, what I want to start with is how do we fundraise $250,000 in 30 days. Now, that might seem like a lot of money, but in reality, for real estate deals, $250,000 does not go a long ways for a lot of the deals that we're doing. A lot of this concept that I'm going to be talking about comes by a very spectacular book called Getting the Money by Susan Lasseter Lyons. And one of the concepts of the book, or the premise of the book, is that if you want to raise that much capital that quickly, is you have to do 4 buckets. So these 4 buckets, what they are is they're groups of people. And so your first bucket is friends and family. Your second bucket is wealthy individuals. Your third bucket is people who are already investing in real estate. And then your fourth bucket is people who are already lending in real estate. And the reason that you're creating these buckets is because out of those 4 buckets, now you're going to think about the people that you know in those categories. You're going to write down 10 names of people that you know in each individual category, and you're going to pick up the phone and you're going to call them. And you're going to reach out and try to ask them if they'd be willing to invest in your real estate deals. And I know that that may seem overly simplistic. It might seem like, oh, well, why are these 40 people going to give me money? What do I say to them? How do I approach them? In reality, we're just approaching them to see if they would be interested in funding a real estate deal when that real estate deal comes in the future, unless you already have one right now. And the reason I'm telling you this is because it's such a simple methodology, but I've raised millions in doing this over and over again. And so every time I get stuck and I need capital, I'll make this list of 40. I've made my original list, called all of them, got as much money as we can from there. Next time I need money, I'll go back through that same 40, assuming that I've built some relationships, and ask if they have any capital available. Because some of the times people will say, yes, I would lend to you, but no, I don't have the capital right now. So you're calling them back to see if they have it because you have an exciting deal to present at that time. Some people will tell you, no, I would not do it at all, and I don't have the money. Well, those are people who maybe you stay in touch with, maybe you don't. And there are other people who say, heck yes, I would do it. When you have a deal, send it to me. I'll review the deal and we'll go from there. And those are the people that you want to stay in touch with. And then you can make as many lists of 40s over and over and over and over and over and over again. And so I think you get the point, is that raising private money is not that difficult. You just have to treat it like a business, because it is a segment of your business, and you have to be as aggressive with raising money as you are with acquisitions, trying to bring in real estate deals. So now let's talk about some limiting beliefs. So a lot of you are probably listening to this and saying, okay, I can make my buckets, I can make my list, but why would somebody give me money? And I feel like there's a really common limiting belief that a lot of people have. Well, I'll tell you there's a few reasons, especially if they're your family or friends. Well, they already know you, they already like you, or they already trust you. And who easier to go to talk about raising capital from than people who already know who you are deep down and already like you and trust you, or at least they should. Second reason is, especially if this is a real estate person, somebody who invests in real estate or already does real estate loans, they just like the real estate asset class. Maybe they're looking at you less and the asset more, but still, like, they like real estate. And then third, hopefully by the point that you're raising money, you're an expert in real estate, and they might not be, especially friends and family. They may have a perception of you that maybe you don't even have of yourself, that this person knows what they're doing. This guy, he knows how to do real estate. He's done flipping, or he does land, and maybe I should go in with this guy. And you start talking about the returns, you start talking about the possibilities, you ask them if they would be even interested in the first place. And a lot of times, if they trust you and you're an expert in your field, they don't want to be doing what you're doing, but they would love to benefit by just investing money alongside you. 2, biggest limiting belief: nobody in my buckets has enough money to fund my deals. Well, that might be true. If that is true, maybe you need new friends. Just kidding, you don't. But at the same time, even if the people that you can think of, and I'd be surprised if you could find 40 people who don't have any money to give you any kind of money in real estate, Because what you have to remember is that even if you had, say, a $500,000 deal, this really large deal, right? You might not need all 500,000. Maybe you could get a bank to lend you 80% of that. Maybe you could get somebody else to lend you, 75% of it. Maybe you're only looking for $100,000. Maybe again, a bank or some private investor would lend you 75 to 80% of it. Maybe you only need 20,000 to do the deal. And so I know that these numbers are still large numbers. It's not like $100 or $1,000. It's several tens of thousands, if not hundreds of thousands of dollars you need. At the same time, if you're able to adequately explain and show them how big this opportunity could be with you, I think you're going to find a lot more money than you ever dreamed of, because that's been my personal experience. Another thing with people not having money, sometimes it's not the people that you reach out to who have the money. Sometimes it's the people that they know. So for example, if you grew up with a friend who you know doesn't have the money, yet has parents and grandparents and aunts and uncles and cousins, by the time you've actually spoken to, say, 40 people, you're going to find somebody who has some kind of money and who might be willing to give it to you. And so you're having these conversations to open other conversations and doors that you couldn't do before. So hope that helps. So third thing on limiting beliefs, how do I pay them? Well, one of the main ways you could pay them is through equity or through debt partnerships. So with equity partnerships, what you're doing is you're offering them a piece of the pie if you make money, but you're also asking them to split the losses with you if you lose money. And so that makes it a little bit less risky to you, especially if this is your first handful of deals. On the other hand, if you're an experienced land investor, you've done this a while, you probably need to stop giving up equity and you can give away debt. And so with debt, that's more of a fixed rate return. And so on the fixed rate return, most private money lenders get excited somewhere between 8 to 12%, maybe with a handful of points in there if you need to sweeten the deal a little bit for them. You could also maybe do a mixture of debt and equity. For instance, maybe like a 5 or 6% rate, matching what they would get at their bank, and then give them some upside on the equity. On your equity partnerships, you probably don't need to be giving away all, half of the deal. Maybe you could get away with 20%, 30% potentially. But the point is that as you get more experience, you tend to move from equity to debt, because debt is constant, it's a fixed figure, and you get to keep more of your equity. Whereas on equity-based partnerships, you pay out more, but you take less risk. Number 4, what if I lose their money? Probably the biggest limiting belief of all. And I'll tell you that that's a very valid concern. And if you're asking yourself that question, then you're the exact kind of person who needs to be fundraising from people. The people out there, the business owners who don't need to go out and raise private capital, are the ones who are not asking themselves, what is the risk? What if I lose their money? How do I pay them back, right? The very fact that you're concerned about other people's money, potentially more than your own, especially when you're fundraising, shows that you're a good candidate in the first place to go out and try to do this. And I'll tell you, the secret to the way that you don't lose other people's money is you buy a deal so good that it's impossible for you to lose money, so that you don't lose money. And so how you do that, right, is going to come from other videos, and you can study from other people who have talked about how to do due diligence, how to do good deals. But if you have done everything to mitigate your risk, it's a good deal, you're buying it at an impossibly low price where it's impossible for you to lose money, you're not going to lose money. Anyways, guys, hope this helped. Hope you got there and raised an absolute ton of money, and I'll talk to you soon.